The following is a presentation of TFNN. Now, the author of Mastering Probability, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the January 10th terrific Thursday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and folks, I absolutely treasure your presence here today, and my outcome is to help you to become a better money master and to provide you with the tools that each of us need to lead an inspired life, because leading an inspired life, folks, that is what it's all about. So let's go take a look at one of our tools. This is the tool that I call enjoying your success. I hope each of you out there are enjoying your success. You know, the key to enjoying success, true success, folks, is to respond instead of to react to life. Because when you respond versus react, life will start responding to you. Respond, folks, versus react. When we trade the markets, respond to your signals out there, whatever set of indicators it is that you use, whether it's A to B equals CD, maybe it's A, B, C, D in the Chapman wave. Maybe it's just taking a look at swing points. But whatever signals they are, folks, respond to your signals, and guess what? The market will start responding to you. So let's go take a look at what the signals are in the marketplace. What's going on right now? We've got the futures up, Dow futures up right now about 50 points here. ES mini up 7.5, about 0.5%. You've got the NASDAQ futures leading the hunt on the way up here right now. NASDAQ futures up 18 points, trading out at 2740. The Russell 2000 up 3.5 points. King dollar pulling back 52 ticks right now. So we'll take a look at the euro. The euro was popping most certainly before we came on to the air. We'll take a look at the Japanese yen. Gold finally moving, getting above the top of the hammer candle that it had created last Friday. Gold right now up at 16.69. That's up 14 bucks and change. Silver up higher. Silver up 41 cents. Silver, high-o silver has absolutely woken up here, up 1 4/10%. Light sweet crude up $1.17, trading out at 94.26 over across the pond. You've got the DAX up 40 points right now. That's up 0.5%. The FTSE up 0.2%, up 13 points. In Asia, everything was green last night. The Nikkei up 74 points. The Shanghai up 8. The Hang Seng up 135. Our call-in number, as always, 877-927-6648. Sounds like the throat is starting to heal here. Way better than yesterday, that is for sure. So it does feel good to be on the mend out here. Let's start with the daily of the S&P futures contract here. So far this morning, the S&P futures have taken out the highs from January 4th. That high out there was 1463, trading at 1463 and a quarter right now. Had a little spike up to the 1465 level. Of course, if you're watching us on TigerTV, you see a black horizontal line growing across the screen. If you're just listening in on the radio or maybe your mobile device out there, you basically have a line of horizontal resistance. That horizontal resistance is going back to the September 14th candle. Now, the high in September 14th in the futures, 1468. Then had this little doji candle. The futures then pulled back from there. It didn't pull back too much. Pulled back into a low in September 27th. Then goes ahead, moves up and tests that area again. Does it with a little doji candle, which is suggesting that the market has kind of lost its strength to the upside. That's really what identifies it as a resistance area. That session, October 5th, gets up into the 1466 level. Then you can see you got other tests of that area. You've got the January 4th level. That is the high that was taken out earlier this morning here. When I say taken out, that was punched up above it. You're trading a dollar above it right now out at the 1463 level. So we'll see today. The line has been drawn in the sand. If the ES mini closes above 1468, and it's got some volume behind it, then you got a true breakout. If you say, well, where can it go? You just take a look at the A to B equals CD pattern that could be out here. Your A point is going to be that November 16th low. Your B point on this is going to be all the way up at the December 19th high. That's at 1446. And you can pull it all the way back down to the low that was put in on December 28th before the market went ahead and started its excursion up to higher prices out there. 1488, it looks like, is the 1-to-1 A to B equals CD pattern that would be out there. That's assuming that you can get above the September 14th level. If you take a look at the expansion of September 14th all the way down to the low of November 16th, you'll see that quite a bit higher than that would be the 1.272 extension. That would be up at the 1505 level. So 1488 to 1505 if, in fact, the S&P futures can take out that September 14th high. Now let's go dig down a little bit further into the S&P futures contract. I'm going to take you down into the 10-minute chart at about 845 or so. I was going to show you a potential 3 drive to a top pattern. That certainly failed out there. But let me see if I... Yeah, I'm not going to do that. Not going to do that here. We'll come back to it. You know, it's not too often the market was setting up on an intraday basis, both on a 30-minute and on a 10-minute chart here for a potential 3 drive to a top pattern. That was coming in at the 1462 level, punched up higher than that as it got up to 1465. So what it would look like here, I'll draw it in, but this is not a 3 drive to a top pattern. What you're really looking for here is you're looking for price and time to actually match. In this case here, I would be using the swing point high at about 2350. So what is that? 1150 in the evening on January 9th out there, out at the 1460.25 level. And at 1460.25, that would then the market moves down into the 3:40 a.m. time frame here this morning. Your first drive would have been this candle right here out at 5:20 this morning. That was your first drive. Your third drive would have been up, would have been right around the 10:10 time frame. However, if we do take a look at it, you can see you've got a little butterfly expansion out here anyways, as it made a high, just still using that same candle out there. So that's kind of interesting as well. However, if we do take a look at the time, let's take a look at volume as that swing point was passed. And a swing point, again, going back to that January 4th, and we're taking a look at the 10-minute chart out here. You'd go back to January 4th out here, that swing point high, 1463. The volume out there was 61,000 contracts. Now, as that area was taken on this morning here, moved up with 43,000 contracts. So not too bad at 8:50 in the morning. Still not enough volume necessarily to give you a confirmed move above that swing point, but the volume not too bad. You can see here also on the 10-minute chart as that move was being made, got into that overbought condition. So it's just simply working its way off here right now, which it needs to do. That is on the 10-minute chart. Let's go take a look at the NASDAQ futures here. You've got Apple leading in the clubhouse here. Closed out at 517, trading up $11 right now out at 528.66. In fact, let's go over to the Apple chart first. Let's go see what Apple is trading into. And I'm sure I've got the 5-minute chart out here up on my screen, as we do. So Apple now trading out at 528.66. 528.66 is going to take it up into, that's going to take it all the way up here into the swing point from January 8th out here. January 8th, when it got into overbought condition, that swing point high is 531.89. Volume up there, 720,000 contracts. We'll see what kind of volume when the market here opens up at 9:15 a.m. That is what it is moving into. Let's see what else we can see out here on the chart. Just really an area of horizontal resistance right at about the level where it is trading. So we'll see if Apple is off to the races now, which you can also pay attention to as you take a look at this chart here. You can see that as Apple was closing yesterday, moved down into that oversold condition, getting into that extreme level RSI reading of about 20, just under 20. And you can see here, works this way on any time frame chart that you might trade out here. And you can see, as Apple, the last time that it got down to that oversold condition was at about 940, 950 on January 9th. That was yesterday. Of course, it gets down there. It's got to work that condition off. It starts moving higher. Never did get to the overbought condition, but likely will this morning on that pop up. Now let's go take a look at the actual NASDAQ futures contract. Let's go see what it is trading into. We'll take a look at the daily chart here first. Why? Because the NASDAQ futures has been the weak link out here. NASDAQ futures not yet having taken out the high from January 3rd. That's its swing point high, its most recent swing point high. That level is 2747. Got up to 2743.50 here this morning. You can see on the daily chart has much more room to run in order before it would get into any overbought bought condition out here. You can see also trading above the 0.618 level, what is likely to have occur out here. And I do expect the markets are going to continue to move higher into tomorrow, perhaps Monday. I laid this out for you yesterday. In fact, if you are just tuning in and maybe didn't catch yesterday's show, I'm not going to go through all of that again. But what you can do is you can go take a look at listen to the archive, watch the archive of yesterday's 9 o'clock show. Laid everything out for you with regard to the market moving higher into a set of lunar and celestial aspects that have been great at being able to identify market reversals out there. Remember, you want to sell into strength and buy weakness. So with the market moving up, what the NASDAQ could do, this is where we could get some complications here. Sorry about that, folks. Just overcoming some food poisoning from Sunday and Monday. So if you bear with me, I appreciate it. So what the NASDAQ futures also could be doing here is going back and trying to test that trend line. That trend line going all the way back, in this case here in the NASDAQ futures, to the August low, August 9th, 2011 out there. That next touch point that you can use really is at November 25th level out at the 23.15. Once you break a trend line, what likes to happen is the market likes to go back up and try to test that area. So the NASDAQ futures certainly could run up there. Even the 0.786 is hanging out in that level, which is about the 2780 range. We'll take things one day at a time. Let's go take a look at gold here. Real quickly, let's go take a look at gold. Then we'll take a look at silver and anything else that you'd like. You just have to give us a call at 877-927-6648. Gold right now trading out at 1669. Gold here getting above the hammer candle that was put in on January 4th. Now you got some good volume down there. What you can see is what is holding gold in play right now happens to be the 20-day exponential moving average. That level is 1672.50. We'll see if that can hold gold in check here. You can see really coming back all the way to the time frame of about, where did it start here? Really, ever since November 28th, when we all came back from Thanksgiving, that 20-day exponential moving average is acted as a resistance point for gold. This morning, as it popped right up into it and trading just below that. Tiffany leading the charge to the downside, as well as Molly Corp and Ascena Retail. Tiffany trading down at 58.81, closed at $63. We'll be right back, folks.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th and will be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bond par from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week, with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex symbol GPL or on the Toronto Stock Exchange symbol GPR.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Welcome back, folks. And, before we went to break, we were taking a look at the NASDAQ futures, taking a look at that trend line that goes all the way back to the August 9 time frame. And as I mentioned to you, that when you break a trend line or a channel line, whether you break it to the upside or to the downside here. In this case here, I'm taking a look at natural gas. If you're watching us on TigerTV, we're taking a look at the continuous contract. That often what happens is price tries to eventually get back inside either the trend or the price channel. Now, the difference is the trend line, you'd be using the bottom of the wick of the candle versus on a channel line. What I'm actually using is the open and the close, co-located opens and closes, and using at least 3. In fact, as many as you can identify out there, that will give you the best channel line. In the case of natural gas here, natural gas had that weird day where there were just a few thousand contracts that had pushed it all the way down January 2nd. But it still was a trade, 2 trades out there pushing natural gas down. I think it was 4,000. I can't remember what the size of the trade was, but pushed natural gas all the way down to the $3.05 level. Of course, when it did that, it went ahead and it broke that long-term price channel. That was the price channel going back into the April 2012 time frame. Just to show you how this works here, it breaks that channel. Trade sideways the following day on January 3rd. January 4th makes a little bullish engulfing candle as it starts to work its way up. And then you get this little kind of doji candle, if you will, on January the 7th. You can see on January 7th, tries to get up inside there and then immediately gives it up. Yesterday, moving down with some accelerated volume. Of course, as it had moved down on January 2nd, was pushing down towards that oversold condition. Didn't get all the way down to the bottom of that area. Went ahead and worked it off and has rejected that area. Has not been able to get back inside the price channel. I know there's a lot of folks, including myself, that were or want to play natural gas, the UNG. In this case here, until you get a bullish sign, there is no reason to, or until you even get back inside the price channel out there. Otherwise, you could see much lower prices coming at us. Now, if we take a look at the pause here that has transpired between the low of yesterday and where we're at right now, all you have to do is just simply come down to more of an intraday chart. So if I come down to the 30-minute chart here, what you'll see is as price was careening down yesterday, got down to a low at 1 p.m. yesterday. As it was moving down there, you can also see what it did was it got into that oversold condition. And when you start to get into those extreme areas, which is below 70, it was below 30. In this case here, it got down to, let me put the actual study up on my screen so I can tell you what it actually got down to. A level of about 22.21, 22.20, and it's getting into that extreme condition. It has to work that self off. That's where you're getting, some exhaustion. You had a continuous selling pressure all the way down there, and that's really all that the natural gas has done. One of the other things that you want to do, what Tom teaches us is always to follow the volume out here. And if you start going back and you start taking a look at natural gas, whether it's a 30-minute contract or a 10-minute contract, what you'll see is all the volume bars are volume bars really to the downside. You'll see a spike or two to the upside. But if you start going back all the way to natural gas coming off of the highs out here, quite frankly, all the volume bars are really to the downside. So it looks like that when natural gas did here, if you take a look at that 30-minute chart, moves into that oversold territory, moves up close to being overbought. Didn't get up to that 70 level. But what you did do as it got up in the 8 o'clock session, immediately sold off. And we've seen a little bit of volume coming out of it. Natural gas is going to come back down and test the lows of yesterday at the $3.08 level. Not something that I suggest that you play here. Wait for the bulls to show up, and wait for the bulls to show up on something more than just the 30-minute chart out here. If we take a look at bonds, see what bonds are doing. We take a look at bonds. We take a look at going from the most recent swing point high in bonds. That is December 28th out there. That level is 148.25 all the way down to the low that was put in on January 4th. That low was 143.170. If you take your Fibonacci retracement ruler, you go from the high all the way down to the low. The very first move, if you are going to get a move in either direction, in this case here, a move up is going to be to where? Which level on your Fibonacci? That's right, 0.382. You've got 0.382, 0.618, and 0.786. At 0.382, that dead cat bounce area, that is the first area of movement. So if you were long bonds, you should be expecting that. You should be expecting it to get up there and to let some traders off of the elevator, that would be taking their profits here. If you were really in a belief mode that you should be shorting bonds, because in the case here of bonds, we're taking a look at the same thing. You've got down at the bottom, you've got the relative strength, in this case here, relative weakness. It's down into the oversold condition, so it has to work its way off. In this case here, bonds working its way off, getting up to the 0.382 level. Today giving you quite a bearish candle out here. We'll see how the day finishes, though. As we come into the open, you've got the Dow futures up 53, the S&P up 8. Leading the charge is going to be Apple, Cirrus, Logic. They close at 30.21. They're trading at $31 right now. ARM Holdings breaking out, closed at 40, trading out right now at 41.40. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insights subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. Don't have the voice for that just yet. Got the Dow up 39 points right now. S&P up 7. Composite up 19. Small caps up 2. Microsoft up 3 pennies. Intel up 16. Google up $4 and change. Cisco up 11 pennies. Apple up $9 here right now. And let's take a look at ARM Holdings. I mentioned ARM Holdings before we went into the break. Now, what I've got up on my screen here is a weekly chart. And what's great here, it's got a pattern. This is a pattern that you can play. Maybe you don't have a formation tool on the charting software that you use where you can easily draw an A to B equals CD. But what you can do, what you can look for, is you can identify, in this case here, a sideways trading range, a consolidation area. And that's what the 2 black lines that you're looking at on the screen are identifying for you. So if you take a look at ARM Holdings, we're taking a look at the weekly chart. It really started a consolidation, and you'd have to say pretty much at the high of January 7th, 2011. So from January of 2011 until November of 2012 out here, ARM Holdings was consolidating. Now, the question was it going to break out to the upside or the downside? So if you're a person that likes to play, let's say, a continuation move, maybe you were already in ARM Holdings, you were looking for places to add to it, or you're just looking to, most candle signals are reversal candle signals. And most patterns are reversal patterns that are out here. Here's a continuation pattern. There's several of them. Here's one continuation pattern, which is just a sideways trading range. Some people call it a box. Some people, it's just a consolidation. It's where it's moving sideways. And it's very easy to identify those areas just simply by drawing horizontal lines. You can see at the highs. You can see the highs here. The top were the February 18, 2011 time frame, the May 6, 2011 time frame, the November 4th, 2011 time frame, and then the last time that those highs, and the highs I'm talking about, are in the $34 area. You can see that price was just moving up in October of 2012, the week of October 26th out there. Of course, that makes sense out there. And it was moving up with 22 million shares. It was really the first sign of volume. Now, if you go from the high, which is, we're going to call it $33 out here, the top of that sideways consolidation move. So you got $33 down to the low, in essence, which looks like it's about $22, $21.96 the week of May 18th. So you got 22 to 33. By my math, that's $11. Now, if you want to identify where this would extend to, you would add that $11 once it breaks out. In this case here, either the upside or the downside. Well, broke out to the upside, did that on the week of November 2nd. So if you add 33 plus 11, you get $44. Looks like ARM Holdings wants to head to the $44 area. It's trading at $41.61, so already at 42. That's assuming that I did my math right there. That was kind of quick math, but it helps you just simply to understand the patterns that are out there. Let's go pop down and take a look at Apple, see what that is doing. We saw in the pre-market here was popping more than it did here off of the shoot. And Apple is going to be the chart we're going to want to watch here because, you know, what Apple is showing, and it's showing it even right now, is Apple just simply has sellers out there. So Apple opens up and they opens up at the high of 528.50, gets up to 528.72. No big whoops there. And you can see here immediately going from oversold to overbought and then selling off. Pretty cool tool out there that you can use on any time frame, isn't it? I think so, too. So now you got Apple moving up. And the volume there at the open, a pretty good volume as well. So you had 1.1 million shares. That 1.1 million shares was going into 720,000 shares. So you got some sellers still in Apple. We'll have to really pay attention to Apple during the day here, but now working off that overbought condition. Let's go take a look at some of these other stocks here that are moving. Let's take a look at Tiffany, see what Tiffany is doing. They were out with numbers, poor retail numbers, I believe, or at least comp numbers, or they revised their estimates down to see, they see their full year profit at the low end of the outlook. So TIF, you know, we're just beginning the earnings season. I'll have to come in each day with the what's going on in the who's releasing numbers before and after. Tiffany here coming down into a area where it most recently broke out, which happens to be on August 24th out here. Tiffany had gapped up with 9.4 million shares. That area didn't really necessarily hold as a support level as Tiffany gapped down on November 29th and gapped down with 10 million shares. So this morning here, you know, it's really kind of in a awkward little range here. Second gap down. We'll see if this holds here during the trading session today. If it does, already says got some pretty good volume. Already has done 1.7 million shares. What it should do is move down into the swing point from December 27th. That only has 2.5 million shares out there. And it's really, you've got this, you know, boy, Tiffany is, it's not really a great-looking stock chart, is it, out here? Tiffany made a high back in July of 2011. It's not even close to those highs. That was out at about $85, trading down at 59 here right now. A number of institutional sellers inside this stock beginning back in January of 2012. And we've seen those institutions come in and sell this, bang, 1, 2, 3, and today being the fourth time down for Tiffany. Let's take a look at, let's see here, what's leading the charge? MSC Industrial Direct Inc., down 6%. MSM is the ticker symbol. So let's go see what MSM is trading into. That is gapping down this morning, has got good volume. It has a high volume low here that looks like that has not been tested. So let's go take a look at that. That high volume low is this swing point here from October the 1st out there. It got October the 1st is where it looks like it is headed to. That price point is somewhere in the range of $65.46 to $68. Has 1.2 million shares down there. So far this has created an island reversal. How about that, folks? So here's an island reversal. This is not a good sign. What is this? Let's go see what this company actually does. MSM here. So they have created an island reversal this morning with volume. So MSN Industrial Direct, what are these guys here? Together with its subsidiaries, operates in direct market. Okay, so they're maybe a direct marketing firm versus multi-level marketing. Maintenance, repair, and operation products primarily in the United States. The marketer of what? various metalworking and maintenance products. So you've got an island reversal. This one here is you've got a lot of folks that are stranded. Take a look at this, take a look at this island reversal. This one here, starting, of course, on December 31st. So it was that gap up on January 2nd. Moves up with 463,000 shares. Trades up here for a period of 6 days, gapping down this morning. That is a very bearish sign. That says here that this will more than likely come back at least. Let's go put this on a weekly basis now. So now that we know we've got a daily island reversal out here, let's go see what this is going to come down into. It should have some. It's going to come down and test those lows for sure, which is that July 13th area. So 62.52 to 61 bucks out there. You can see on the weekly creating quite a bearish engulfing candle as well, giving you a little bit of a signal here as it was making its highs back in April of 2012. You got these little doji candles up here. Says it was losing steam to the upside. And if it can break through the level here of July 20th, it'll be setting up an A to B equals CD down pattern. So that would take this thing here. MSM is the ticker symbol. That would take it down. Well, the 1-to-1 is 55 bucks. More likely the $48, which would take you back into the swing point from August 19th of 2011. I suspect that is where she wants to run to. MSM is the ticker symbol. Let's go take a look at a couple things here popping. Let's go take a look at oil and silver. So if we go take a look at oil, light sweet crude here right now, light sweet crude moving up. So if we take a look at light sweet crude, let me erase a couple things off of my screen here, make it a little bit easier for you to follow along. And so we've got the A to B equals CD pattern. Let's start with that. Your A point is the low on November 7th. That's when light sweet crude is down at the 84.05 level, moves up to a price point on December 3rd, gets up to 90.33. Goes ahead and makes, it looks like about a 0.786 retracement into December 11th out there as it moves back to $85. 1-to-1 A to B equals CD was made back in December 27th. You had one day where you had the bears show up in light sweet crude as it made, right after it made that 1-to-1 A to B equals CD. That was on December 28th. That candle was immediately reversed. That was on December 31st. You have not seen any bears here as it makes its A to B equals CD up pattern. It looks like light sweet crude, the next level is 95.37, trade at 94.28. Now, let's take a look at retracements off of the top. Let's see if this is setting up a Gartley sell pattern out here. Now you'd come for a retracement. You'd come off of the high of September 14th. That level was $100.42 all the way down to your A point. And again, your A point was the low of the trading session on November 7th. That is 84.05. You can see right now that what light sweet crude is doing is trading at that 0.618 level, which is actually 94.17, trade at 94.26. However, no bears here have shown up in light sweet crude. You do have light sweet crude trading now above the 200-day exponential moving average. So it looks to me like crude headed to the 95 to 96, 92 level. That would be your sweet 786. Well, you can see, though, on the daily chart, you can see crude now starting to get stretched, moving into the overbought territory. RSI reading on this about 71.42. So I would be paying attention to light sweet crude. I'd be paying attention for the bears because they're lurking out there. Of course, they're hanging out with the King and his troops, King Dollar, which is back 57 cents. So speaking of that, we didn't go take a look at any of the currencies, so we ought to go do that here right now. So let's go take a look at the currency marketplace. Let's look at the euro first. What I've got up on my screen here is the 30-minute chart on the euro. You can see this getting into extreme overbought conditions here. RSI reading of 88 as it completes a 1-to-1 A to B equals CD up. However, looks to me like it wants a little bit further to go in price. I say that because as it came in and completed the 1-to-1, look at that wide-ranging bar here in the euro. Widest ranging bar we've seen on the way up or way down. And the way down, again, I'm looking at a 30-minute chart, was from 3 a.m. on January the second out here as the euro made a high out there at the 132.919. So it looks like the euro here wants to hit up to about 132.189. Of course, the bears will give you a candle signal, most certainly. But right now, the euro getting into the overbought, not just overbought, extreme overbought condition. You know, if I pull this back on a, you can take a look at the spike if you're watching on Tiger TV. Again, if you're listening in on your mobile device or the radio, right now the RSI rating is 88.70. If I just pull this back here, well, let me see if I can refresh my screen and get back any further here. I might have to go make some other adjustments on my screen. I can't, but so I guess I can't really show you how far back we go that it hasn't gotten on an intraday chart gotten to that level in quite some time. And there we go. Let me see if it gets. No, it certainly didn't. In any event here, let's take a look at retracements now from the high of January the 2nd all the way down to your 8-point, the low that came in on the euro. That was in at 7:30 in the morning on January the 4th out at the 130.008 level. So you can see getting to the 0.618, you got the 0.786 retracement up at the 132. Looks like 132.2. My eyes can really see. So 132, 189 to 132.2 is where the euro wants to head to. And I suspect once it gets there, we'll start to see some type of retracement just simply because of the overbought condition that it is in. If we go take a look at the daily chart on the euro, let's put this on a daily chart. You can see you got a wide-ranging bar today. So it wants to get up to, it's already past the 0.618 level. Of course, I think we were using the same high, weren't we? No, we're using December 19th here. Let me go ahead and let's take a look at the retracement off of December 19th. Give me a moment here just to delete that. Okay, now we're going to use our retracement tool. We're going to go from the actual high, that little gravestone doji candle here that was created on December 19th, that high down to the low on January 4th. So 0.786, 1.324, and change on the daily chart. Looks to me like that is where the euro is headed to, which will come in and test the swing point, the December 19th area, and certainly has room on the daily chart to run to the upside, not either overbought or oversold here. So it's the daily, it's just the breathing pattern here. You should see a pullback that should start, any time here in the near future. So let's go take a look at the Japanese yen. Let's go see what is going on with the yen here this morning. We'll look at the daily chart. I guess we'll look at the 30-minute chart here. We're going to look at the 30-minute chart. The yen, if we take a look at this, and this is you can see really moving. Let's put the relative strength indicator up here as well for you to take a look at. You can see the yen here actually gave you a little divergence here. This thing made higher highs with higher lows in the relative strength. Made its high here at 8:30 this morning, coming back all the way to the swing point, the high swing point out here at January 4th. Now, what I'm going to do is I'm going to put this on the daily chart, and then we can swing back down into the intraday chart here. The daily chart, the high was made out here. This was a 1.618 butterfly expansion. If we take a look at the expansion, you would be looking at the swing point high from March of 2012 all the way down to the low that was put in here at September 14th. Didn't get all the way up there, but it got close enough for my work, and you really got the bearish candles, two bearish candles, if you stitch them together. That was on January 7th as well as January 8th. Getting back up there and testing it, the Japanese yen on the daily chart in overbought territory. Look for the Japanese yen to also pull back. 877-927-6648. Dow is up 32. S&P is up 5. Apple up $5 as well. We'll be right back.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back. As we come to the last segment here, you've got the Dow's up 35 points. The S&P is up 6. Composite up 14. Strength in the marketplace has been the Russell 2000, just slightly negative, down 19 ticks right now. Let's go take a look at the other strength in the marketplace. New York Stock Exchange up 0.4 of a point, up 37 points right now. Some things moving here to the downside. You've got Aeropostale. I think that's how you pronounce it. ARO is the ticker symbol. That is trading down $1.32, about 10% here this morning. As you take a look at this stock chart, just a ugly-looking stock chart, making a high back in April of 2010 out at the $32 level. It's trading at $12 right now, giving you some certain bearish candle signals all of the way down. Each time it moved up, you got some big, wide-ranging bearish engulfing candles. You can see here Aeropostale. Looks like it's going to go for the most recent swing point low. This is the weekly chart that we're looking at, folks. This is the low of 1176. The volume there is 11 million shares. through yesterday was 8 million shares. So it's got volume today. It should be able to take that level out. Aeropostale is going to take you all the way back to an area of support, which is down at the lows here, which are going to be the next swing point. In this case, is going to take you back to September of 2011 out in the $9 range, $9 to $10.48. Molly Corp, one of the an old-time favorite, MCP, off 20% this morning, off $2. Let's go see what is going on here with MCP. Where is that? I think I've got that on my screen. Molly Corp, where are you? I just have to dig for Molly Corp. There we go. Right in front of me all the time. So we're going to take a look at Molly Corp. As I said, down 20% here this morning. This is down with some good volume. Let me see if there's some news behind Molly Corp. They announced new rare earth complex is operational and ramping up towards full-scale production. That is the only news that I see out here. Molly Corp here did have a sign of, I guess you can call it a sign of strength, most certainly, which is where it's trading into, which is December 10th. So it's where it most recently broke out. The low of that is 887. You're already down below that area. The volume that it had that day is 22 million shares so far. In only 26 minutes of trading, 10 million shares. So the air is coming out of that tire. Says that Molly Corp will come all the way back down, or should come all the way back down, and test the lows at $5.75. So 20% is what is trading off now. It's got, looks like, more than 20% to go on the way down. That is on the daily chart. We go take a look at this on the monthly chart. I don't believe once it gets down to that level, anybody will be in a profit position. Yeah, most certainly not. So be careful if you are in Molly Corp here. Let me go back to the daily chart, and let's just take, just for giggles, there's another word too, but so you can see here on Molly Corp. So take a look at the thing, gets into the overbought condition, gave you a signal here if you were inside Molly Corp, gave you this little bearish engulfing candle on January 8th out there, said to be aware. This was after moving up into a overbought condition out here. If you were somebody that had played this, each time it does get into the oversold territory, it does certainly bounce up, but everything does. It's got to just simply alleviate that congestion that it has out there. So that was on Molly Corp. Let's go take a look at, let's see, what else dollar-wise? What is big moving to the upside here? You got BJ's Restaurant, BJRI. So let's, I would try this here real quickly. BJRI, and that is trading up about 8%, 7% here right now. Of course, this thing is moving into its sign of weakness out here. This thing here had a real sign of weakness, which was on October 26th out here. All it's going to do is traveling up into its supply line. Thanks for being here, folks. Stay tuned for the Money Masters show. Dow's up 45, S&P's up 6. If you're off to start your day, have a terrific Thursday. We'll look forward to seeing you tomorrow. The voice should be even stronger then. Take care, folks.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.